Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everybody, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of AdMail. On today's podcast, Prohibited Transaction number 8. Going to go through 3 superb questions involving the prohibited transaction rules under Internal Revenue Code Section 408 and 4975. So I think you're really going to enjoy today's podcast, especially if you are into buying real estate and need to pay for improvements or even travel. What are the IRS prohibited transaction rules say about doing that using retirement funds? So just a quick recap of the IRS prohibited transaction rules. Section 4975 talks about prohibited transaction rules, and what 4975 says in sum is when you are doing something with an IRA, okay, you want to make sure that the IRA investment is only being done to benefit the retirement account. So if you're watching this on YouTube, I've shared my screen that includes the prohibited transaction rules under 4975C, 1A to F. And in sum, what they say is when your IRA is transacting and it transacts with a disqualified person, it could trigger a prohibited transaction. And a disqualified person is you personally, your parents, children, spouse, daughter-in-law, son-in-law, or any entities controlled 50% or more by such persons, right? Because you can't buy a house and live in it. You can't exchange property between your IRA and a disqualified person. So in order to have a prohibited transaction, you need 2 parties, the retirement account and a disqualified person. If there's no disqualified person, there's likely no prohibited transaction. Okay, so in sum, remember, just the intent of these rules is the IRS basically wants you to make investments using retirement accounts in a way that only benefits your retirement account, and there's no personal direct or indirect benefit to you or any disqualified person. So first question is from Dylan W. Dylan wants to know, I own 50% of an entity with a friend who also owns 50%. Can I lend that friend money using my IRA for non-business purposes? So Dylan, great question. So we got to look at 4975, which talks about who is a disqualified person. Okay, so if you look at 4975E2 in disqualified person, you're going to see under E2, it's going to say this: an officer, director, or a 10% or more shareholder, or a highly compensated employee of a person described in C, D, E, and G. And C doesn't apply, D doesn't apply, E and G applies, which is basically anyone who owns 50% or more of an entity. If that person also owns 10%, you have a situation where someone owns 50% or more, and on the other side, there's someone who owns 10% or more. Those 2 people are disqualified to each other. Okay, so anyone who's a 10% or more shareholder, highly compensated employee of an entity where someone else owns more than 50%, those 2 parties are disqualified. So Dylan, going back to your question, in the case of a situation where you own 50% and this other friend owns more than 10%, you are both disqualified to each other. So hence, you're not able to lend money to your friend, even if it's for non-business purposes. Like you guys are disqualified. It's kind of like you're married or he's your son, and you are disqualified to each other, and you are not allowed to transact with each other. And the rules are basically because the IRS doesn't want people to transact in a situation where there could be some indirect benefit because of that business relationship. So they don't want you taking that money and then somehow contributing it back to the company. So now let's go to question 2. It's from Skylar T. Skylar wants to know, I'm planning on renovating a home in my self-directed IRA. I need to go to Lowe's to buy some stuff for the house. How should I do that? So remember, when it comes to using retirement accounts, I strongly suggest the less you do, the better. So you can make decisions like how much you want to charge to sell the house, or what you want to charge a renter, who the renter is, what color the walls will be, or do you want to renovate the backyard and put a pool in? You can make those decisions. But anything that's not reasonable and necessary, I wouldn't do. So I wouldn't build a pool, right? I wouldn't paint the walls, and I wouldn't go to Lowe's to buy furniture or materials. Get a third party to do it. A contractor, get a friend, just a non-disqualified person, a non-parent, non-child, non-spouse, non-daughter-in-law, non-son-in-law. So you get your buddy, literally say, hey, go to Lowe's, here's a list of what I want, or even online, go online and let your friend use their credit card and then write them a check from your IRA or Zelda money or Venmo money from your IRA LLC account and let them do it. Okay, that's much cleaner. It's the easiest way to do it. Go on your phone with them and say, hey, this is the 4 or 5 things I want. Da, 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 da. It's going to be $800. I'll write you a check from my IRA LLC account, my IRA account. You buy it, deliver it to the property. And this way it's so much cleaner than you doing it yourself. Okay. Now, if you have a debit or a card for your IRA LLC, then yeah, you can do it yourself. But if you don't, it's easier just to have a contractor or a third party make that purchase for you. So much easier. And this way you can get the materials you need or the furniture, and you don't have to potentially violate any of the prohibited transaction rules because you're not doing anything, right? You're just literally writing a check to someone who's performing that action on behalf of your IRA. So that's the way I would do it, Skylar, if it was up to me. Third and final question of today's podcast from Monica R. Monica wants to know, I want to buy property in Belize using a self-directed IRA. Can I use my IRA to pay for the travel? So this is kind of like Skylar's question. My suggestion is no. Why? Because the onus is on you. If you read any tax court case, the onus is always on the taxpayer to prove that what they did was not in violation of any IRS rules. So anytime you go to Belize or any destination and you're using personal or retirement money, I should say, now you got to prove that it's being done to only benefit the retirement account. And that's kind of hard, right? You stop at the bar, stay in a hotel, maybe you go for a swim. It's just too risky. So what I would say is just use your personal money, go to Belize on vacation, you find a house, you want to use your IRA to buy. Okay. Don't write off the cost. And again, it's not helpful to use your IRA to pay for these costs because it's not deductible. And you're sucking money out of your IRA to pay for an expense that's not tax deductible. It wouldn't be tax deductible anyways using personal funds, but you want to keep as much money in your retirement account as possible, especially if you have a Roth IRA, to protect the tax efficiency of the product and of the retirement account. So it doesn't make sense in itself to use a retirement account to pay for your Belize, I don't want to call it vacation, but you're outing to Belize to go check the real estate and do your diligence. It's better just to pay for it personally, whether you have some IRA benefit as well. That's great. Check out the homes, look at the properties, look at the community, make sure you want to invest there. That's fine. I would not use IRA money. Number one, I think it's risky because if the IRS asks about those expenses and sees your IRA paid for an American Airlines trip to Belize and a Ritz-Carlton hotel, that's not going to be so easy to explain. And then you're going to have to prove that it was only done for IRA purposes and not personal purposes. And it's maybe easier if you go to Milwaukee, but if you go to Belize, probably not the easiest thing to defend. And then on top of that, you're taking tax exempt money and using it for an expense that's not even tax deductible. So I would not do that if I was in your shoes. And I think it's potentially also risky and prohibited. So I would stay away from doing that, Monica. So thank you for everyone that sending in questions. I got really, really good number of questions, but always need more and love picking the best 3 of the week. So send them in, info@IRA Financial. You can leave a comment or question in any of our social media feeds on, obviously, YouTube, any of our podcasts, LinkedIn, Instagram, Facebook, Twitter, wherever. You have a question, you send it in. You don't have to be a client. It's anonymous, so you don't have to be concerned that you'll be embarrassed that someone will think you're stupid, which, again, I'll say it for the millionth time. First thing you learn in law school is no question is stupid. Okay, and I believe that. So if you have that question, there's probably 1,000 people that have the same question. Ask it. This is a safe and confidential environment where you can ask questions and we can all learn from each other, which is the name of the game and why and how we can all become better, more successful, and hopefully richer, self-directed retirement investors. So That's it for today's podcast. Hope you enjoyed it. Appreciate you guys hanging out with me today. Have a great day. See everyone again next week. Thanks.